Hi, everyone. This is Jason Burek of Wall Street from East Street. Welcome back to another Wall Street from East Street podcast interview. Today's special guest is a returning guest. It's Doc from the Silver Doctors. Thank you for joining me again.
Oh, it's great to be back, Jason.
Now, Doc, for our listeners out there, for the benefit of them, a lot of them love to buy gold and silver. We have a lot of gold bugs and silver bugs, and people like both who don't want to pick between gold and silver who listen to this podcast. But not all of them understand the journey that the gold and silver have to go through. So let's kind of track that through the supply chain for the benefit of our listeners so they can understand, all the different levels and the hard work involved. Now, I think gold and silver, it starts off at the miners, and then they turn it into the doré bar, right, which is like this. If you go and watch videos on YouTube of how silver mining works or gold mining works, you see this like 300-pound bar, right, that they pull off. Where do these doré bars go after that?
You have that, and then you also have, especially on the private mint side, quite a bit go to the refiners just as scrap purchases and scrap sales. So the metal goes to the refiner. They refine it down to more pure, usually 0.99939 silver. I think there's only a couple mints in the world that are minting 4.9 silver. The Royal Canadian Mint, I think the Perth Mint is going to go to 4.9 for their 2016 for a couple of coins, but mostly across the industry it's 3.9. They refine the silver down to, and then it's either it used to be they'd be hand poured into bars. Now it's typically a machine process, or at the coin level, then blanks are stamped, and then at the private mint, once they have the blanks, they are stamped into private rounds, or at the official U.S. Mint, the blanks are sent to the U.S. Mint, which then stamp on the Silver Eagle coins, and then they're cased up in tubes and boxes, sent to the authorized distributors, from there to smaller wholesalers and to the dealers, and then to the public.
Okay, that's very interesting. So the refiners then are the next step after the miners, and then the government mints like the U.S. Mint and the Royal Canadian Mint, the Perth Mint, they get the dibs on the majority of the gold and silver that's available from the refiners?
That's just really contractually. They wouldn't really have dibs on the silver. It would basically whatever they've contractually locked in. From there it goes either to on the private side to the mint, and they're cast into the bars, or 100-ounce bars, 10-ounce bars, 5-ounce bars, and then all the myriad of coin products that are available.
Okay, very good. Now, some people would say, I guess, that there could be bottlenecks, problems throughout the supply chain at the time, and that may look like shortages. I've heard David Morgan say that in the past, in the last couple of years. Is that what we have now?
That certainly is a big part of it, but personally, I don't think that's all of it, and I'll give you one anecdotal reason for that. Probably the largest or the most popular, or one of the two most popular private mint 100-ounce silver bars in the U.S. They're sold exclusively through an authorized distributor. That authorized distributor last Wednesday was contractually promised to receive delivery of, I believe it was 1,000 100-ounce bars. So we're talking 1 million ounces of silver just for one 100-ounce bar product, just for 1 week. And the mint only delivered less than a third of that. It was about 300,000 ounces. So these are 100-ounce bars and not like 1-ounce coins. So that just gives you a little bit of insight at the wholesale level that it's not just issues with blanks of coins going on in the market right now.
Yeah, I read your article that you released instead of the SD Metals and Market Wrap about the wholesale shortages with some of your sources that you were saying, and these you're not just shooting off your hip. You're talking you're listing evidence of different places where it's becoming difficult to get silver, it sounds to me like we do have some type of a shortage looming. But when you look at the comment section of your article, I don't know if you read the comment section. Maybe you didn't want to read some nasty stuff there. But there's a lot of disbelievers, sentiment levels low. I've heard from people in the past, oh, I can buy 1,000-ounce bars easily, so there's no shortage. And even my hedge fund manager friend and senior mining analyst at the Morgan Report, Christopher Marchese, he was telling me on Facebook, and he was telling other people on Facebook, that it's impossible for a silver shortage to occur because silver is not like rice or wheat or corn or things like that. And what's your opinion on people saying that it's impossible for there to ever be a silver shortage?
Well, I think there's a little bit of a misunderstanding of the market. If we didn't have a paper market that was the tail wagging the dog, with prices below what you're seeing for physical demand, then I completely understand what he's coming from, and I think he'd be right. I haven't talked to him. I haven't even really heard his statements, but I would, from listening to you, I would surmise that his thoughts and his thought process are that silver and gold are fundamentally different than a food-type commodity, which you can't really be stored indefinitely. Silver that was purchased 100 years ago is still silver. Wheat, you can't store it indefinitely. Corn, you can't store it indefinitely. And if you had a severe drought, a famine, certainly food is a primary necessity for humans. And a severe shortage of food, it becomes a life-sustaining event in desperation for humans. We need food. We all need food. Gold and silver, they are money, but you're not going to die without it. But so can there be a shortage if gold and silver, the markets were based on not on the paper, but actual trading of gold and silver, then I would, for the most extent, agree with him. Out and stepping back for a minute from the point that silver is consumed industrially, but just from a monetary perspective, he'd be right, because the price would rise to meet that increased demand, and investors that have previously purchased gold and silver coins, they're going to then, some of them are going to sell coins, and a rise in price would alleviate a shortage and prevent a shortage. But when you have paper markets controlling the price, and irregardless of the physical fundamentals, then certainly we can have and will again see shortages develop, because the paper markets are distorting and not lining up with physical market fundamental supply and demand. So that would be my response.
Yeah, that my response would be very, very similar to that. In a free market, we would have true price discovery based on fundamentals, right? So if there were maybe temporary amounts of supply constraints, the price would just go up and supply would respond to that. But that's not what we have now. We have a situation where for the last 4 years, basically, the silver price just keeps going down and down and down, while you and me look at the fundamentals of the market, and, I could start rattling off the fundamentals of the silver market, and, I see solar panel demand on the industrial side increasing a lot globally, and we see the politicians in so many different countries talk about how they want to install more solar panels, so solar panel demand is growing rapidly.
His point is there's probably 1 to 2 billion ounces of investment silver that are out in the market. So on a theological level, that's not his point is that there can't be a shortage. There's all that silver available. There's bought as coins. But in reality, that's not coming back to the market at $14 an ounce. If we had $30 an ounce silver, $50 an ounce silver, sure, a lot of that would come back to the market, but not at $14, $12, $10.
Yeah, very, very good points. Yeah, exactly. It's a function of price, this shortage, and I think it's one of the basic economics laws that when the price of a commodity is held below its cost, that there's going to be shortages when it's not the producers are not allowed to make a profit eventually.
Exactly, and investors complain when the shortages develop and premiums rise, but it's not no matter who your dealer is, whether it's a local coin store, AppMax, us at SD Bullion, people aren't trying to take advantage of you when it's just simply the physical price diverging from the paper market because the demand for actual metal is greater than what the paper price is pushing it to. So, I mean, if you want physical coins, the price diverges a bit from the paper.
Yeah, I mean, the premiums in 2008, they were double the paper price at one point, right? In many different areas to buy silver, unless you were buying 1,000-ounce bars on the COMEX.
Right. I mean, delivering from the COMEX is a very cumbersome process and really not feasible for the average retail investor. And even in 2008, 1,000-ounce silver bars at the retail level were selling for $3 to $4 per ounce over spot when you had $8 silver. So, I mean, do the math. That's almost 40% premium for 1,000-ounce bars.
Wow. Yeah, I mean that's not a smooth market there where it's really easy to get supply. I mean you're paying up a big premium there. It's just it doesn't sound like the market was working when the premium is that large. I mean maybe someone else would disagree with me on that, but when the premiums are that large, it doesn't seem like the market is working smoothly like it should.
Right.
Now I want to talk about the negative sentiment in silver level. You know, you were around in 2008. You sell a lot of silver bullion to customers. Do you think the sentiment levels are much worse now than in 2008?
I think so, because it's been a prolonged process, and it's something that I mean, it's interesting. Even going back to 2007, 2008, the legendary investor Jim Sinclair, he came out at the time and said that the entities that were going to make the most money in this secular gold and silver bull market were going to be the bullion banks and not the precious metals bulls, because Sinclair came out and said that they were going to be bucked off the market and they wouldn't be able to, I think his words were, sit tight and be right. They wouldn't be able to sustain and endure the price corrections. And I think we're seeing that from the average retail investor.
Yeah, I would completely agree. I mean, we have a bunch of people turning 180s now who I'm getting some negative comments on some of my videos telling me how good CNBC is again and all this stuff and how CNBC didn't lose them all this money. But, I mean, no one told them to go put all their money in at once into gold and silver and just hold metal and just hold cash and then that's good. I mean, there was a lot of gamblers out there, Doc, who the metal had been rising, I guess, 12 years in a row, and I guess they saw it as more of a sure thing. And they put a lot of their money, or way too much of their money. There was no diversification at all.
I mean, in my perspective, it's mostly a timing issue and a psychology issue. The average retail investor buys at the exact worst time, and they sell at the exact worst time, and it's all because of emotions. What I've learned just in my own personal investing is whatever my emotions tell me to do. Now, to put this in perspective, if it's something I've done my research on and I have a long-term fundamental belief, if my emotions are, so I guess to back up, say something like gold and silver, I have a long-term fundamental belief that they're heading higher. If my emotions are telling me that I need to sell, that's the time to me that you need to check that and let logic take over, check your emotions at the door, and do the opposite, is what I've learned from me personally. Is I'm much more successful doing that versus letting my emotions dictate when to buy and sell, because when markets are moving up, your emotions, greed kicks in, and I'll wait a little higher to sell, a little higher to sell, a little higher to sell. Professionals, they don't do that. They simply react and respond without emotion. That's why they're professionals. If price goes up, they sell. If it goes up further, they sell more. If price goes down, they buy. If price goes down further, they respond by buying more. They don't wait to see, oh, maybe price will go a little bit more, because professionals know nobody catches the exact bottom tick. But retail investors, they want to catch the bottom tick, and what happens then is they miss the bottom and they chase as the market goes up.
Exactly, and it's a fool's game to try to pick exact bottoms or exact tops in the market. So I mean, it's smart just to be a contrarian and hope the trend reverses that you've gotten a pretty good range on the reversal. And I mean,
and the important
when you look
thing
at
also is to not, especially if you're not a professional, don't use margin, because I mean that'll just take you out.
Well, I mean, people should be very careful with debt, period, nowadays, whether it's buying silver or anything else for that matter. Yeah. Yeah, I mean, look at the valuations. I mean, when I look at valuations on bonds or many stocks, I mean, there's just no bargains out there, and we're starting to see, some billionaires, whether it's Stanley Druckenmiller, who's, one of George Soros's money managers. This guy's a, mainstream guy, and he's buying gold now. So we're starting to see evidence, I guess, that people, the money managers,
gold in parentheses.
yeah. Well, he's gonna figure out that GLD is not really gold, but I mean, he's I'm sure there's a lot of other guys out there that are starting to say, you know what, I made a lot of money in the stock market the last 3 or 4 years. The stock market's almost doubled since the 2009 lows. And, there's no fundamentals out there. The earnings are garbage. They're engineered and stuff like that. So, I mean, maybe the market will go higher, but it's not going to go higher on any fundamentals. So a lot of the professional investors out there are selling positions and going to cash and things like that now.
Right, and highlighting the professional point of that, the professionals.
Okay, well, I want to talk about the miners because, when we look at supply and demand of the market, the actual real fundamentals of gold and silver, especially silver, I see demand increasing for industrial, with both Indian physical demand. I think they imported, according to Kuz Jensen, record amounts the last couple of years. And China's importing a good amount too. And I see enormous solar panel demand. And then I see supply problems on the miners. And what I don't hear a lot of people talking about is this low copper price. And because silver is such a lot of silver mining is a byproduct of, base metals like copper and things like that. So this copper price crashing, that's going to potentially mean copper mines shut off, and the silver byproduct could eventually shut off too, right?
Yeah, and that'll have a bigger impact, in my opinion, than the primary mines. I mean, the majority of mined silver comes as a byproduct from copper and zinc mines. It's not, I mean, the primary mines, just primary mining silver, are a very small portion of the mining industry.
Well, about 30%. So, I mean, it's 30% versus 100 versus 70%. So, I get your point though. But I mean, if both of them are struggling, so if the copper producers who produce silver as a byproduct, they're struggling now that the copper price has collapsed, and the silver miners were struggling before. I mean, that's a double whammy to me on the supply side, right?
Right. And then you throw in nobody's wanting on the secondary market, scrap sales, investment customers, nobody's selling any silver. So where's the supply going to come from?
Exactly. And so this market with the paper price we have, it's like when I interviewed Keith Neumeyer, he says we don't have price discovery. I see a market where the demand essentially for physical metal, and, not in the West, because most of the retail investors, like you mentioned, they're not adding a lot of physical metal. Maybe some of the staunch silver bugs or staunch gold bugs are, but most of people have given up and are bashing gold and silver now. Some professionals are adding it, but it's a market where globally demand is still rising. There's obviously looming supply problems with the miners, whether they're primary silver miners or base metal miners who produce silver as a byproduct. So, in these types of situations where there's demand increasing and supply problems, normally in a free market with price discovery, the price would be starting to respond and expect higher prices, right, instead of the paper price going lower.
Right. And what's quite amazing to me is that we talked about the sentiment a little bit. I mean, the sentiment is at the lowest levels we've seen in the entire, really since the last 20 years, since the secular bull market began. And in the face of that terribly negative sentiment, I mean, coin and bar sales investment demand is still running at all-time highs. I mean, the U.S. Mint is on pace to set a new all-time annual sales record for Silver Eagles, assuming they don't shut down sales for the last 3 months. So, I mean, that's in the face of terribly negative sentiment. So there's really no room for any turn in investor sentiment.
Yeah, and I read the comment section of our videos. I respond to some of them when I can. I mean, there's just so many videos now. And I read the article, the comment section, like I said earlier, on your wholesale evidence of wholesale shortages. And, most of the people just don't believe it. So I think we've gotten to almost like peak, maximum pessimism. I guess, I'm a big fan of Sir John Templeton. And he was a hardcore contrarian. He made a lot of money investing in many different markets, commodities, stocks. He bought stocks during World War II, during the war. And, he said to buy things at maximum pessimism and, just try to keep your emotion out of it. And he was like, over the long term, normally you did very well. But we're not seeing that in the retail environment right now.
No, we're not.
Well, I have a couple more questions for you, and then I'll let you go. What's your view on Ted Butler's theory, then, that J.P. Morgan may have bought up massive amounts of physical silver? Do you think J.P. Morgan could be then an authorized purchaser or authorized dealer of silver then from the U.S. Mint, so they get metal directly from the Mint?
No, they're not an authorized purchaser. That's a pretty in-depth process from the U.S. Mint. The U.S. Mint publishes who the authorized purchasers are. They're not one of them. And there's no way they're buying Silver Eagles. Number one, it wouldn't make sense for them. Number two, the rest of the market would know about it within about half an hour if it was happening. It's whether they're stocking up on physical. That part can be speculated. If they are, they're doing it in the 1,000-ounce bar level. They're not doing it on 1-ounce retail coins with high premiums.
Yeah, fair enough. It seems like they've gotten out of their paper short position to a certain extent, and there's someone on the COMEX. But the COMEX is not really a physical metal exchange, as you mentioned earlier. How difficult it is to actually get physical metal, and they can cash settle, they can change the rules. It's written by lawyers, so it's mostly a paper price vehicle for hedge funds to leverage up and speculate on and things like that. It's not a real physical exchange like the LBMA is or the Shanghai Gold Exchange compared to the COMEX.
Right. It's a combination of the funds that are speculating and then the actual companies and firms that deal in physical. They don't typically use it to source delivery. They're just using it to try to hedge their production or sales if they use it at all.
Okay, so to wrap this up then, I think our listeners should go read your article on Silver Doctors, Wholesale Silver Shortage Confirmed. There's a lot of interesting points on there, and it doesn't necessarily mean that we have a full shortage now, but at least it's seeming to be looming. And in a situation here where there's no price discovery in the market, there's no incentive for really anyone to start selling scrap silver. We're not going to see a situation where silver hit $50 and everyone started selling like their grandma's silverware and silver plates and things like that into the market for scrap. We're not going to see that at $14 silver, and we're not going to see a situation where the miners, either the base metal miners who are, they have their copper hedged or their iron ore hedged, and those mines could potentially come offline now when those hedges expire because the base metal prices are down massively in the last year or two. So I don't see a situation where we're going to have massive amounts of new supply hit the market, especially at these prices anytime soon. Most of the project stock, I don't know if you pay a lot of attention to silver miners, but the feasibility studies of most of the silver mines that have been brought online since 2008, 2009, they needed $25, $30 an ounce silver, and those mines, now they haven't been shut down yet, but maybe they've cut the cost a little, but I don't think that they can survive much longer. They've been running at just enormous losses.
Yeah, it's certainly perfect storm that's developing. And again, I'd agree that we don't have a full-fledged shortage yet, but it is developing, and it's really not far away potentially. It really, in my opinion, depends on what the paper price does from here. Today, paper price is getting kicked down again. I think a combination of two things. If paper prices break 14 to the downside, and potentially or if the U.S. Mint follows through on their kind of whisperings to authorized dealers that they're going to shut down Silver Eagles in September, switch over to the 2016 coins, things could get quite interesting very rapidly on the physical side for silver availability, and silver premiums. And that's not even discussing all of the internet rumors and everything about the system collapsing in a month. So even without that happening.
Yeah, I mean, a full-fledged shortage, I don't see where, I go online to all the bullion dealers and it's not available. So I think that's what most people think of as a shortage is, I guess, 2008 or worse, where they would go online to every single bullion dealer, they would go to all of their local coin shops, and they just wouldn't be able to get any metal, or the premiums would just be totally outrageous. So we haven't seen that yet, but that doesn't mean it won't happen in 6 months if the paper price, continues to stay at these levels or goes lower, like you said. So I think it's fair to say that there's a good amount of evidence now that the shortage is developing.
Yep, I certainly agree.
Okay, Doc. Well, I want to thank you again for your time, and I think our listeners, the ones who didn't understand where the silver bar came from, they're going to get a lot out of this. And I mean, I guess it's just like what either Jim Sinclair or Jesse Livermore said, be right and sit tight, but that's a lot easier said than done when people's money and emotions are involved.
It certainly is. It's definitely not easy, or everybody be doing it.
Yeah, and I mean, to continue to dollar cost average too, which is what James Turk and other people have said throughout the bull market. I mean, most people, the average retail investor doesn't want to do that. he wants to try to time the market somewhat perfectly, and he may have bought silver he may have bought on the dip once or twice, but now he's out of cash instead of buying a little bit every month like a more professional probably would have.
It's very hard to do, but it is emotionally rewarding because it gets you out of the mind frame of trying to bottom pick the exact low tick. And emotionally, if price goes lower, instead of being devastated that your investment is now completely underwater, you're emotionally looking at the opportunity of adding a little bit lower and getting your dollar cost average down a little bit. And if prices do rise, emotionally, part of you is like, oh, wow, my initial investments are up now. So it's a good idea emotionally more than anything, in my opinion.
Yeah, and normally one of the leading indicators, my friend told me this, we talk about this, my friend Connor online, he says that, 90% silver or junk silver is one of the leading indicators with the premiums there on whether or not, the silver price is going to bottom and start to rise. So I guess we're starting to see the premiums on 90% silver start to indicate that there's going to be some potential supply problems.
Yeah, I mean, the 90% silver has been no offer at the market maker at the wholesale level in the U.S. really for the past 5 weeks. So it is typically the leading indicator. Premium spiked in the first week of July, and then it just really hasn't been available since.
Yeah, and in terms of the gold to silver ratio, I mean, as cheap as gold is right now, I think silver is even cheaper because of the ratio right now. How just attractively cheap. I think silver's gotten lumped, as an industrial metal, only an industrial metal. Although silver is an industrial metal, but it's also it's also money. But it's being lumped, I guess, with this China story that the hedge fund managers on Wall Street believe that, China's collapsing, so we have to sell every single industrial metal short, whether it's copper, silver, iron ore, things like that. So I think silver's getting more of that brunt necessarily more than gold.
Certainly.
Okay, great. Well, I'm going to put a link in the text box after this interview for your article, Doc, and people can read the evidence that you have accumulated for themselves about this potentially looming shortage. And if they wanted, they can go comment on your article. There's already a lot of comments there, although most of them are negative. But I see one comment from my friend Lewis over at Small Gold, SMAULGLD, and he's saying that the price will go up when a major electronics or solar panel manufacturer is told there is a delay. Then they will pay a market price based on supply and demand, irrespective of the COMEX price, to make sure they get the metal that they need for their products.
Yeah, I mean, once you have a big industrial user panic, that would definitely change the market overnight.
Yeah, I agree. I think he's dead on because a couple more bucks here or there, I think the industrial users won't care about it as much as a smaller retail investor or a hedge fund manager who's using mass amounts of leverage would.
I mean, think about it from the perspective. If you're Apple and you're manufacturing the iPhone, I mean, what do you sell your phone for? So I mean, take that number versus if you have a quarter ounce of silver in that component, I mean, what's a $5 higher price in silver in a quarter ounce? I mean, you're talking like $1 or $2. Like, you don't care. versus not having the material to make your phones. You can't stop production of your iPhone because of a $1 difference in the price of silver. You'd pay $5-10 an ounce higher to make sure you have it versus being offline production because you don't have any silver.
It makes a lot of sense to me. I mean, but the silver market doesn't make a lot of sense right now with the paper price. What you said though makes a lot of sense with the industrial user wanting to make sure they get their supply because Apple wants to sell all their great products. They're not going to want to shut down to say, oh, we have a silver shortage, or oh, we have to spend 6 months or a year figuring out how to redesign a new product without silver. I mean, that's going to really piss off the customers.
Exactly.
Okay, great. Well, Doc, please tell our listeners more about Silver Doctors, the SD Metals and Markets wrap, and also, your bullion dealer.
Yeah, certainly. SilverDoctors.com for all the latest news and analysis on macro level for finance, specifically focusing on precious metals, and then for retail coins and bars for gold and silver, you can check out sdbullion.com.
Okay, great. Well, thanks again for your time, and we'll see what happens with this potential silver shortage. But I think you're right that if the paper silver price does go much lower, we're going to see potential supply problems developing here, whether it's the miners or things like that in the near future.
It'll certainly be interesting to watch as it continues to develop.